Hello, good day. How are you all today? I'm back again to bring you all some of the review in the financial markets. So this week, which actually started optimistically as investors hope for a better situation with the coronavirus treatment in the United States after the U.S. and Drug Administration issued an emergency use authorization of investigational convalescent plasma for the treatment of COVID-19 in hospitalized patients. According to research, studies patients starts to feel better on the third day after such therapy. Bull are getting support with US President Donald Trump efforts to get urgent approval of AstraZeneca vaccine that could be released on the market before presidential election this November. In the effort to soothe the US China Trump administration, officials are informing American firms in private capacity that they may continue their business with WeChat in order to avoid significant losses after the White House put enormous pressure on Tencent. So, according to Washington Post, the next round of negotiations over the second stimulus package is postponed until September 7. This may limit markets' hunger for new shares purchases as Trump executive orders that provide up to $400 extra aid to unemployment Americans had little effect to provide additional boost to the economy. S&P 500 Brock Market Index has resumed its acute upward movement. A new all-time record has set above 3,400 point level. So the next target could be expected at 3,500 points. Safe haven assets prices are consolidating in the start of the week. Gold is traded in the narrowing triangle and any further direction of its movements are unclear so far. Most likely, the price range will be tightened within the range of 1853 to 2075 dollars per troy ounce. However, a rising trend for gold prices is still intact. Loose monetary policy of many central bank and governments worldwide will only support this trend, and the demand for safe haven assets may have an additional reasons to rise as presidential elections rally in the US become rougher than US China tensions, which actually create additional uncertainty for investors. The benchmark 10-year Treasury yield is at 0.64% on this background. Crude prices are looking stable. The Brent crude benchmark is traded about $45 dollars per barrel or closer to the upper margin of $41.4 to $46.2 per barrel. So the bulls gain advantage for now, but the situation may change rapidly this week. Traders are monitoring the two hurricanes that are actually approaching the US East Coast as most 60% of crude production was suspended in the American part of Mexican Gulf. Hurricanes Marco and Laura are capable to make a damage of several billion dollars to the US oil sector. And the last but not the least, US macro statistics released last week is showing a lower economic recovery in the US that may potentially undermine the demand for crude too. On the other hand, OPEC members are set to increase crude output if any signs of the recovery in demand will declare itself. Taken together, these factors curb any rise in crude prices.